now, and now you have a new forecast for the 10-year yield. Give it to us. Which way is it going?
Frank, I think the 10-year bond yield is going to be heading lower. And the rationale for that is simplistically from a technical perspective, we're seeing a divergence happening. As we saw 10-year bond yields work their way toward that 5% level, reach that sort of level, we've been watching the momentum sort of trailing off as we go. In the technical world, we'd call that a divergent move. And if we step back and say, where can 10-year bond yields ultimately go? We got to really pull out the long-term charts, Frank. We got to go back and look at the long-term secular change that's happened in 10-year bond yields. And I'll just note, since 1981, we have been in a 40-plus year downtrend in rates. In 22, we finally reversed that downtrend. And Frank, when you accelerate through those downtrend reversals, you always get a pullback and a retest of support. I would not be surprised by year-end, Frank, to see the 10-year bond yield, have a 3 in the front handle and maybe be as close as 3.5%, because I do think you need to see 10-year bond yields come back and check that area of what was resistance, which is now going to be support. And that would be a big catalyst, we think, for equities, especially the long-dated ones. And I think a lot of investors would certainly be encouraged by that move.
I'm sure a lot of investors would. So pretty bold prediction. Just to be clear, you're saying the yield on the 10-year, it's going to move more than 1% by the end of the year. You need to mark your calendar, Craig. We got to have you back in December to see if this all works out.
Anytime.
What does this tell you? What are the charts telling you about the S&P action?
Well, the price action for the S&P, we made the lows in October of 22, and on a near-term basis, Frank, we've been seeing the market just sort of pulling back. The S&P has been pulling back. We're off, mid-single digits from where we were in the July highs, but it's finding a lot of support around this 4,200 level. It's also been a retracement levels area of support here, lower end of the channel, the 200-day moving average, all those things are there. And at this point in time, Frank, the market has gotten to be pretty oversold on a lot of the individual equities inside of the S&P 500. I think it's going to be very difficult. It's sort of like pushing a beach ball below the waterline in a pool. I think it's going to be harder to push the S&P lower from here. I think you're going to have to see it move up. True confirmation of that, Frank, is going to happen, that the trend is reemerging and reasserting itself when you get back above the 20-day moving average and also the 50-period moving average, which is around 43.76 for the 50-day. And I think that's still yet to come. And as we get through this earnings season, Frank, I definitely think that the S&P is going to find that momentum to get there.
All right, I want to talk to you about something just outside of earnings season right now. You're not a stock picker, but you added a stock to the Piper Sandler Selective Technicals Opportunity Fund. This one is a favorite here in Worldwide Exchange. It's energy drink maker Celsius. I drink a lot of it myself. What makes this an attractive stock technically to add to your tactical opportunity fund?
Yeah, so what makes it attractive, Frank, is the fact that we've seen the shares pull back appreciably, and we've gotten just back to the longer-term uptrend support line. This is a stock that has followed fundamentally here at Piper. It is among their favorite names fundamentally, but better yet, technically, we've had a nice correction, a retest of support, and it looks like momentum is sort of rebuilding, whether you're looking at RSI, MACD, some of those sort of more technical indicators, Frank. I think there's 20% upside here in the stock, and definitely we like it, and hence we added it into the portfolio.